Good afternoon, everyone. Can everybody hear me from the back? Well, welcome to TechCon 2025, and I hope the sessions so far have been informative for you guys. It started yesterday, and I'm so thrilled to be here with these amazing ladies talking about empowering growth, women investors shaping the future of innovation and impact. My name is Zeynep Ilgaz, and I'm a general partner at CrossOcean Ventures. We invest in international tech founders, seed stage, that have a potential to grow within the US market. And before that, I was a founder of a biotech company. We were acquired 4 years ago. So I am very, very, very honored to be with these wonderful panelists, and I'm going to introduce them to you in a minute. But before that, I wanted to see how many students do we have in the audience? Okay. How many founders do we have? Wonderful. How about investors? Great. And everything else? That's great. So talking about venture capital, the landscape of venture capital is still evolving, especially for female founders and female investors. But I think one of the data that I really liked is the one that came out from PitchBook, saying that last year there were 23% of all VC money went to female founders or co-founders. And I'm not sure how accurate that is in general. I know there is still a lot of growth that needs to happen in this field, but the fact that the numbers are increasing, I think, are really, really, really good. And on the investment side as well, so we have founders, we have the females not just only as founders, but starting VC funds. And we have some in our panel here as well. Actually, last year was a record-breaking number of female investors starting their funds. And a lot of those funds invest in female-founded companies. And I would think some of the increase in the female founders getting funding is having more funds that are also founded by females. And and we're going to talk about these topics today. So our panelists are amazing. Their journeys are a testament of resilience, vision, and transformative power of women in investment. And I would like to dive into their stories, and I'm going to have them introduce themselves. But we have Jeep Klein here. She came all the way from New York to be part of our panel and going back to the Bay Area tonight. So thank you so much for making the way here. Managing partner and founder at Raisewell Ventures. We have Kimberly Davis King, investment partner at Impact X Capital Partners. And we have Bearvi Shavdia, managing director at SBJ Capital. So let's please give a warm welcome to our panelists. To start off with, please, if you wouldn't mind introducing yourself with a brief bio and background and your fund and how you entered the venture capital industry.
Oh my gosh, I wish I can talk about this 3 days. So Raisewell Ventures is my 4th investment fund. Okay, and but it's actually the first fund that I invest in deep tech and really focus on the 3 main sectors. 1 is climate tech, 2 is manufacturing and supply chain, and 3 is health tech. I'm also a professional faculty. I'm a professor at the High School of Business, UC Berkeley, teaching impact-driven venture capital investment because I believe that this is the area that we need to move the world forward. So at my fund, I invest the vast majority of the fund will be invested in the US with a little bit of the specific allocation investing in Southeast Asia. I'm from Bangkok, Thailand originally. Currently, besides running the fund, I'm also sitting on 4 boards, all high-tech companies in 4 different countries. And I have an 11-year-old named Tesla, Emma Jeep, and she's a Tesla. So I'm quite busy. That's, running a fund, founding a fund, launching a fund really give me gray hair.
Welcome to V. I'm really happy to be here. I'll start off with my background since you talked about how we got into VC, and then I'll move forward. So I've been in venture capital for 25 years. And when I went to business school, I was really trying to decide, do I want to go back into high tech? I had worked at Microsoft, had an offer from Oracle, or do something else. And I had a very influential professor named Professor William Solomon, who basically would say you have a snowball's chance in hell to get into venture capital. He goes, but you should go talk to the VCs about their startups. Specifically, at that time, there's a lot of multimedia startups. So that's how actually I got into venture capital. Two of the venture capitalists I talked to said, why don't you become an associate? So I was an associate at Bank of America Ventures for 4 years, and then moved over to IDG Ventures, where I became a partner. Currently, I'm an investment partner for a UK fund called Impact X Capital Partners, which is a double bottom line venture fund located in the UK, but we do about 20 to 30% of our deals in the US. I'm based here in San Diego. One of our other partners is in Denver, and then the rest of the partnership is in the UK. We mostly do software deals, a lot of SaaS, fintech. We also do creative deals. Maybe I'll talk about those too later on. Thanks.
Thank you.
Thanks. So Zainab, thank you for the invitation to participate today. I'm really looking forward to an engaging conversation with Jeep and Kimberly, who are both phenomenal investors. So for me, I am at SBJ Capital. We are a multifamily strategy of funds. We have two strategies. The first is a consumer-focused buyout fund. The second strategy, which I lead, is a flexible capital strategy focused in on healthcare and technology, looking at making both growth equity and debt investments as typically first institutional capital into founder and owner-led businesses. So, my background into the investment world started off in investment banking. I did a couple of years looking at cross-border M&A transactions, and then moved over to a large private equity fund focusing in on healthcare and consumer businesses. And then from there, really just started to understand the landscape of investing. And, what really drew me was working with smaller businesses, working with founders, really helping to shape the journey. And so, now work with companies that are US-based small businesses.
Thank you so much. So my first question is, we have a lot of students and founders in our audience, and looking at the founder side of things, what is some of your piece of advice in terms of, not just from a female standpoint, but please include that as well, but for someone starting out fresh and don't really know what to navigate, they might not even know if they want to raise money, how much should they raise, what route should they take? What are some of the challenges and piece of word of advice that you would give them as a former founder or as an investor now working with a lot of different founders? And please feel free to, whoever wants to Barry, why don't you start?
I can start, right? I think it's one of these things where it's, it's sort of buckle in, it's going to be a bumpy ride. I think all of us that have been through this journey know that success is not linear. It's a roller coaster. There's ups and there's downs. And I think that, if you're just starting out as an entrepreneur, as a founder, or even as an investor, understanding that and understanding the importance of cultivating a high level of emotional intelligence, I think sometimes that really gets overlooked, and it's, people are just focusing about the destination, but it's not. It's about the journey and, being mindful of the fact that, you're always looking for a growth mindset, right? Like looking what have I accomplished? And if it hasn't worked out, don't be afraid to pivot and don't be afraid to kind of change course. And so, that's one thing I would, really urge those that are just in this journey starting out to know that, there's going to be ups and downs, and you've just got to be able to weather that.
Thank you. Yeah, so true.
And I'll add, in addition to that growth mindset, I think you also need to be kind of a constant learner. So having that learning mindset, and realize you do not, and this is something for women, you do not need to be perfect, right? But you need to show up, and that's the key. So I love your journey piece because I think that's so important. But surround yourself with other talented people, get mentors, do realize could take a long time, but don't be afraid to pivot and change, especially that's why that learning comes into play, because you're learning from your customers, you're learning from what's happening in the market. So don't be afraid to really see what those opportunities are and take those opportunities.
So I assume that most of the founders here are early stage. Am I correct? If correct, can you raise hand? Are you early stage? Okay. So as a VC, what I'm looking for the founders more so than the business. A lot of people might not tell you this. technology is important, but not the most important thing. It's about the founders. And how do I look through the founders? So let's say if you want to create a climate tech company, say food tech, so we just talk about like maybe sharing deals on food tech, right? I would like to know if you really understand the industry, even if this is your first venture. Okay, how do you view the industry 5 years from now, 3 years from now, or 10 years from now, and how your ideas and companies really map into it? If there is a disruptor coming in, how are you going to solve the problems? What are your insight and expertise that also allow you to execute and solve the problems? Okay, all these kind of questions that you can answer really give me the gauge of, this is really the good founders who can solve the problems. I would also look around. We are in a very good place, with San Diego, with a lot of professors, incubation. Take advantage of it. How the business model that other people already created really benefit you. Can you copy it, or you're going to take other business model and apply to your business? Uber, right? Disrupting taxi, right? Is a two-sided market, same as a lot of others that usually disruption come from outside sector. Can you look for that so that you are differentiated enough and execute and be the one? So these are the kind of pockets that I look that show me the quality of the founders more so than the technology that you have. I hope I'm specific enough.
Oh yeah, definitely. Barry, did you?
Yeah,
want to
no,
add
I just
something?
wanted to, highlight or spotlight something that Jeep said that I think is incredibly important. And it also came up in one of the panel sessions earlier today, which is, develop something that is solving a problem, right? Really be able to articulate what that problem is as opposed to developing some, technology or solution and then trying to go find a problem, right, to solve it. And I think that is incredibly important.
Yeah, and I wanted to add to that. For example, when we started our company, through our journey, assessing yourself, I think that was also mentioned, which is so important. So I felt like complete at a disadvantage, female founder. I mean, this was a long time, 10 years ago. So I know things are shifting and changing for the better, but I still think there is sometimes there is that ceiling. And immigrant founder, broken English, not Ivy League school. So all these things that sometimes you think investors are looking at, already feeling at a disadvantage, and then having to work twice as hard is what you tell yourself. I have to work twice as hard. I have to prove myself 3 times as more than somebody else, or a male, or, for example, a native-speaking English person. So how do founders, what advice do you give to founders that feel like they are at a disadvantage, whether it's their origin, their language, their female, male, whatever that is for them? How do you navigate that, and how do you create that story when you do pitch it to make sure that you are able to, you're aware of it, and you build a team around that to really address that?
I'll take the bullet first. Use it at your advantage. Nobody is perfect. So let's say if you come from Eastern Europe, Southeast Asia, you have the opportunity to scale and access that market before anyone else because you truly understand the local market. You may start here, but ultimately you can scale, right? You may set up, I don't know, depending on the business, hire engineers who's not as expensive as California engineers, right, locally, because if you speak local language, you know the market, you can reduce the cost of operations. There are a lot of things that you can turn and use it as your competitive advantage, and VC love that. I love that. When people say, so I invested in Latin America. I know it's I don't speak Spanish, but I happen to invest in Latin America in 5 countries, all Spanish-speaking countries, and a lot of them, they launch in the US, and then when they scale, they said, I'm just going to set up 50% of my operating team in a local region because the cost is lower. And that allowed me to penetrate into the market a little bit faster. Or, I happen to know some enterprise company, right, that can be my customer in a local region. They would do the POC, proof of concept with me. why not? You create proof point immediately. There's so many things that you can do. I also want to emphasize a little bit about being a woman. Yes, it's hard, right? And ultimately, VC put money to work. Okay, this is going to be hard to hear, but I also have high expectation on women because we know we can do it. So when I look at men and women, if they were equal, then I would give the shot to the women. But if the women do not perform as well as men, I cannot give that shot. Does that make sense? Because my LPs have very high expectation, and so I know that maybe I'm a little bit jet lagged because I flew Emirates, so I'm a little straightforward. I think that we are very talented, and there's a big market that we can go capture. I just want us to shine and say, hey, no matter what gender we are, what age we are, we can actually be very competitive and bring different solutions that can capture a market opportunity better than anybody else.
I love that.
And just to build a little bit on, especially on use your advantages. So when I got into venture capital in the late 80s, I'm tall, I'm African American, and I'm a woman. So one thing I could look at and say, oh, I'm the minority, or I could look at it from the standpoint of I stand out. Right? And so I use that to my advantage. People remembered who I was. So your network that you develop, I think, is another big thing that you can, especially as women, that we can tap into. We didn't go through our whole background, but one of the things I also do is I'm a member of the Broadway Angels group. This is a angel group, women's angel group in the Bay Area, started by my good friend Sonia Hoel, who was at Menlo Ventures. It's made up of women VCs and very successful women CEOs. We help each other, not only find deals, but in our portfolio companies. So surround yourself and network with other people that can help. Early on in my VC career, both Ann Winblad and Catherine Gould were very good mentors to me. So, two very senior, amazing women VCs. So one thing you can also do, I think, and really don't look at it as a disadvantage, really look at it as what is your advantages and who can I reach out who are going to help you and want you to really succeed.
Yeah, I mean, I would build off of both of those points. For me, I would really encourage others to kind of think about this concept of mentorship, but also think about building out a network of sponsors, right? These aren't just capital providers. These are people that really are advocates for you, for your product, for your business. And they're ones that are going to be able to open up those warm introductions to you. I think, as an investor, right, for all of us, we're probably getting lots of reach outs, right? Lots of people emailing us, trying to connect with us with pitches every day. And I think, it is incredibly important to get that warm introduction, and especially if you're sort of feeling, hey, I'm a female and, we see where the VC dollars go. And there's unfortunately a lot of, biases, right, that go towards the allocation of capital. And so I think being able to, get a warm introduction and develop that network of sponsors is just going to be incredibly powerful.
Yeah, and I think to your point, when I was a student, I graduated from SDSU MBA. I was at a panel, watching a panel, and one of the advice that was giving was network and ask for help. And regardless of who you are, when you're starting this journey, ask for help, and you would be amazed of how much people want to help you. But do your research before you ask for help. When you're asking someone to help you, really understand the background of that person, find some similarities you can reference to, and be really genuine about it. And I think going back to the mentorship, finding mentors throughout my journey has been one of the best things in terms of growing our business. Just asking for advice, asking for connections, and understanding that you might not have all the answers, and that's okay, So I want to shift our focus a little bit more on the impact investment side, which is part of our panel. And impact investment can be in many shapes and forms, creating jobs, helping the economy, or investing in green technology. So I would love to hear more about what impact investment means in terms of your funds and how you help entrepreneurs in that area. Let's start with you. Yeah.
Okay, thank you for another bullet. So I think it depends, okay? The way that you define impact investment, it depends on the thesis. It depends on the time that you launch the fund. And this is actually, the class that I'm teaching at Berkeley, which is impact-driven VC investment. Maybe let me step back quickly. You were right that impact investment can range from, say, one spectrum, which is nonprofit organization, say foundation, they want to give grants and whatnot, to the other spectrum, which is like high-risk asset class, which is venture capital asset class, right? And those would invest in impact-driven area that has, say, social or environmental impact. And I am in this camp, okay, which is impact-driven VC. What I'm looking at, one, financial returns. And I'm saying this because we are in VC asset class. To move the needle and to create an impact in the society, if we don't generate financial return for investors, nobody invests in a fund and nobody gets to make impact. There is a clear priority. If we are in this kind of category or space, with PE, you can speak it the same way. We have to make money because we are not nonprofit. Now, what I'm looking at is, say, when I do deals, I look at, okay, here's the company that come and pitch me. It's clear that it's an impact company because it is, say, food tech, agriculture tech, EV, any platform that reduce CO2 or manufacturing and supply chain tech that improve productivity and efficiency. So I like, at my fund, I make it broad by design because we are new. And when we are new in the industry, and if we try to move the needle, if we are too narrow focus, we are not opportunistic enough to generate financial returns. Does that make sense? So that's why I created the 3 themes. But the 3 themes or verticals that I pick are the themes that the global investors or VCs really want to invest in. And they're also the themes that people are agree upon in the US and also in Asia, because ultimately my funds, I want to drive the change in Asia and be the kind of like the bridge, cross-pollinate between the 2 regions. So that's kind of like how I think about it. If founders come to pitch me and say, oh, this is an impact, but then the numbers is very, very low in terms of the expected returns, I cannot fund them because I'm still in the VC asset class. And I want to be competitive, and I want top-tier returns. And at the same time, I'm also demanding impact returns. So when I'm teaching this class to students, my students sometimes sweating, oh my God, this is really a lot. How am I going to find deals? But if we don't take this kind of challenge, the world will not move towards the impact-driven investment. Because the investors are still capitalists, and they're going to say, well, I don't want any trade-off. Because I can mobilize my fund to, like BlackRock in PE, like crypto and whatnot, that I can generate higher returns. And that's why we don't see impact in the industry, and it's been far too long. So we are in the right place at the right time.
Wonderful, wonderful. Kimberly?
So Impact X is a UK fund, and we are a double bottom line fund, but we are an institutional VC investor. So returns are foremost for our limited partners. However, majority of our limited partners also want to look at what is that social impact that we do. So that really has to do with a social impact and investing in diverse teams. We're very broad on our impact piece. However, on the vertical side, we look at SaaS, digital technology deals, health tech deals, fintech deals. So we kind of stick to the areas that we know well. But we're really looking at how can our fund kind of change the landscape to reflect more of the population of our users, of our customers. And so that's how we measure our social impact. And it's something that's also not only important to us, but important to our LPs. I mean, I worked with 2 traditional funds. When I decided to go back to ImpactX, I really wanted to make an impact. I mean, I also teach, and I think that's one other way I kind of give back. But I also, through my investment and my experience, I wanted to kind of give others that opportunity to be able to grow and fund their companies.
Sure. So SBJ Capital, this is my 4th impact investment fund. All of the funds are institutionally backed funds that have generated above market rate returns, right? So if we're looking at this continuum of where impact is, I think, for VC funds, for PE funds, for other funds, right, that are looking to deploy an impact strategy, right, echoing what others on this panel have said, it is very important to be able to demonstrate that you are generating above market rate returns. Otherwise, it's not a sustainable business. Your limited partners are not going to back you for additional funds, right? And so, that's sort of on how we're looking at shaping our investment returns. What we look at from an impact standpoint is around job quality. That's a core thesis and a core focus area for us. We're looking at how do we improve job quality in U.S.-based small businesses. U.S.-based small businesses still employ about half of the population in the U.S., and so it is a broad market. It is also a thesis that you can use across different verticals, say, healthcare, consumer, technology, right? All of these companies have workers or have employees. They all need to invest in their employees. We believe investing in human capital is a critical, marker for business success. And so we view our impact work as additive to our financial returns. And so we work with our portfolio companies to look at job quality, to look at how do we reduce turnover, how do we increase employee engagement, and how do those things translate into operational excellence, but then also economic well-being for their workers and for the communities in which these businesses are located.
Thank you for that, Barry. And Barry's former fund, HCAP, was actually an investor in our company twice. And one of the reasons we wanted to work with HCAP was to the impact part of it. It wasn't all about the numbers, but really treating our employees right, investing in our cultures, investing in our employees. Knowing that you have to, hit certain numbers, but you can invest in your employees and still be a profitable company. So I think that's very important. Now I want to shift our focus to a little bit to personal stories. And I wanted to see, as you said, it's a roller coaster, ups and downs, it's not linear. What are some of those, can you share with our audience a story where you had those, roller coaster moment, and what did it take you to get back on track, and any piece of advice we can take from that? And Barry, let's start with you this time.
Sure. I think for me, it was incredibly challenging, right, to return to work. I think, I have 2 daughters, and I think, going back was incredibly challenging. I think one of the things that was particularly hard for me was at that time I was working for, an impact fund focused on quality jobs that did not have a parental leave in place because, there was never a woman in the fund that had to go out on leave. And you're like, wait, what? Like, we're not drinking our own Kool-Aid. What's happening? And so, that was a lot of it was, working through that and saying, hey, we need to put something in place, right? And what does that mean? And again, just having that level of emotional intelligence and having a network of other women investors, right? Being able to email them and say, hey, what plan, if any, do you guys have in your fund, right? Because for many funds, they're still small, right? They're still small shops. And so I think that was incredibly important, was to be able to leverage my network at that point.
Thank you.
So I'll talk about fundraising. So I think most entrepreneurs don't realize us as venture investors, we have to go fundraise too. So there's lots of ups and downs of venture fundraising in terms of getting LPs bought into your thesis and investing in your fund. So when I joined ImpactX Capital, they had done a kind of proof of concept fund in the UK, and then we're looking to raise a larger fund. And so definitely ups and downs of, especially when you're talking about diversity in the climate that we're in today, trying to find like-minded investors and finding people who understand what we were trying to do, and the fact that you can have great companies with diversity. We have a unicorn company. Marshmallow is a fintech company that's a unicorn in the UK. We have outperform the market in the first fund. And so telling our story not only about those venture returns, but the social impact, can be challenging, I would say, in today's climate.
My gosh, I have a lot of failures. I don't even know how to start answering. It's just like, when I tried to launch my first fund, the very first fund, impact-driven fund. So I had this idea 10 years ago, before we even talk about impact investing. Now, everybody heard about this, right? But about 10 years ago, I was thinking, I want to go out and raise my first fund. I have the idea, I have the thesis. I see clear opportunity why we need it as an industry. I didn't raise a single dollar. I put in almost $500,000 personal capital, doing a lot of things like legal fee and whatnot. And I also tried to raise from Asia, where I'm from. Nobody put in money. I came back to the US. I was like, oh my God, nobody understood what I was trying to do in my own home country. How am I contributing back and through the venture investment? And then COVID hit. So, we had to stay home. It's a lockdown period. I raised money, and so I changed my thesis. I pivot. So we are entrepreneurs too. I pivot. I said, Asia is not ready. I'm going to do Latin America. 5 countries. I raised money all online, over Zoom. Never fly, didn't invest besides my time. Didn't speak Spanish or Portuguese. I raised a fund during COVID. I invested in 5 countries. Believe it or not, it's been 5 years. So we started with, and then COVID hit, and then and I told my partner, how are we going to raise? By the way, I warned my partner, I just finished raising another fund. I got 0. Are you sure you want to partner with me? And my partner is Latin American, so he's from Argentina. We met in business school and so on. He said, yeah, Jeep, let's try. How can it hurt? You don't even need to travel. No jet lag. Like, okay, convinced enough. I was a partner in a firm that brought the biggest check size in the fund, all through Zoom. So we already finished deploying that fund and so on. It's been 5 years. Investment period has passed. Then I launched 2 follow-on funds quickly, and now it's my 4th fund. And I thought to myself, this is behavioral economy, so let me get a little bit deeper. As a professor, I can't help myself, okay? So before COVID, I was too early for the market, okay, for impact-driven investment. Latin America fund, it was also impact-driven fund. And that was one of the funds that I also proved myself, we got top returns and we have impact returns. But what's so interesting to me is pre-COVID, investor told me that, I don't want to invest because I'm afraid that the recession is coming. That was, since Obama, the economy has done really well, we didn't have any recession for like 8 years. And I was like, how do you know the recession is coming? Because I'm married an economist, and he said nobody can predict recession. And they said, I read McKinsey report. And they said, it's going to come in September this year. I'm like, what? Sorry, I hope we didn't tape it, but that's okay. That's the jet lag impact. So then during COVID, obviously, people were scared. They saw what the worst looked like. Oh my God, people were hoarding toilet paper. And we are laughing now, but it was true, right? And then they invest millions. So I talked to all, labor economists and behavioral economists. I'm like, what is going on? So the worst enemy of venture investment is the investor's expectation. now I know how this works. That's why I raised my fourth fund. I was like, okay, this is the right time.
Congratulations. Congratulations.
It's a roller coaster. It's up and down.
For sure, for sure. Before we open it up to Q&A, I want to ask one last question to each panelist. What is your favorite quote, and what's your favorite book that you would recommend to our audience? Barry?
Sure. So a book that I really like, it's called The Gap in the Gain. And it is really about, developing that growth mindset and looking at what you've done on this journey. So I highly recommend that. And then a favorite this is like a life quote, just a quote about life.
Exactly.
Yeah. So I really like a quote by Maya Angelou, and it says, success is liking yourself, liking what you do, and liking how you do it.
Lovely. Thank you. Kimberly?
So my favorite book. Well, I have two I like a lot. And this is one that I also teach here at San Diego State that we have our students read in the Fundamentals of Entrepreneurship, and is What I Wish I Knew When I Was 20. So if you have any young people, or for those students, definitely read this book. I think it really opens your eyes to opportunities and the fact that problems, challenges are truly opportunities. The other book I really like is The Purpose-Driven Life. I think it's a great book. And then quotes, actually, Maya Angelou, another quote that I really like is, people are not going to remember what they say, they're going to remember how you feel. And I think that is so important, that empathy, not only to our society and the world, but also to venture capital and investing in entrepreneurship.
Thank you so much. Jeep?
The quote for me, I like what Mr. Honda, the founder of Honda, say that, life is 99% failure and 1% success. But the 1% success that you have is much better than the 99% failure that you experience. And I think this is about entrepreneurship, which also related to one of my favorite books by Ben Horowitz, The Hard Things About the Hard Things. I usually don't read, I don't have time that much these days, but that is the only book I would say in the last 5 years that I read twice.
Mm-hmm. Hard Things About Hard Things. Lovely. Let's open it up to Q&A. Yes, and I'll bring the mic. I don't know if we can hear you.
Wonderful. Thank you, panelists. And this has been really informative, and everybody spoke so clearly and told such wonderful stories, so thank you. I wanted to ask, Jeep, you spoke about how you're looking at the founder. Like, do you really understand what you're trying to do? Do you understand where you're going to sell to? And I think this applies to all of you. So I'm curious, what percentage of people that come asking for money are you investing in?
You're on the spotlight.
I love audible lists, especially from women. 1%.
I was going to say it's a very small number. We look at a lot of deals, but to your point about really understanding a deal that hopefully will close on Tuesday that I've been working on, the founder actually put himself as the customer initially to learn about this industry. And so they built a business doing this initially so they could kind of look at all the problems and challenges before he built the solution. So really, truly understood the problem. So there's a saying in venture capital about, are you betting on the jockey or the horse, right? And so people become so important because markets change. And so you have to have that right team that can navigate and see that opportunity. And so I love when entrepreneurs are so immersed in the area that they just become experts. And they don't have to have years of experience. One of our, I would say, kind of local San Diego State entrepreneurs is Luke Sofinis from Korsky. One thing I was so impressed about Luke as a student, he was a student of mine and also in the ZIP program, is he just learned everything about his market. He just became this kind of constant learner. He was constantly talking with people and really, had a real pulse on what was happening. And I think that's so important. And one thing about, especially as angel investing and also my venture investing, I really look for those type of founders they might not win, but they're going to die trying, right? They just are persevere. And there's something just about them when you see them, they're not going to give up. They're going to keep trying and pivoting and changing until they kind of come to an outcome. And I think that's so important.
Yeah, I do a little bit later stage investing relative to Jeep and Kimberly, but just to give you a sense, right? When we think about a fund, we think about, what is the portfolio construction, right? What are the number of portfolio companies we have in the fund, and what is the deployment period of that fund? And so, for us, we're looking at a 5-year deployment period, and we're looking at a portfolio of maybe only 20 to 25 companies, right? And on average, we see over 1,000 deals a year. And so, it's a relatively small percentage of companies that we do invest in every year. And I would say, when we look at opportunities, yes, we look at the founder, but because we're a little bit later stage, right, we're also looking at, who are the core people around the management teams, right? And that also says, as a founder, what is your ability to sell your vision to bring other talented people on board as well, too?
Thank you. Do we have any other questions? I also would like to encourage our students to ask questions. This is a very friendly audience.
If you were a high school female interested in eventually entering this ecosystem, and this doesn't apply to me, as you might guess, but I have an interest in it. You mentioned a book, Kimberly, but is there anything that you would recommend if you can put yourself back in high school and kind of look ahead to where you are now and your success, how you would get there quicker?
I'm a big believer in STEM. I was an engineer. My daughter, who's now 22, working at GSK, was an engineer. So I would say, don't be afraid of learning in high school, of doing hard things, of engineering or science. Immerse yourself in kind of an industry that you're interested in. It's hard to kind of, I would say, plan your career for investing or venture capital. It kind of happens. It's kind of very opportunistic, but you can kind of put yourself in more of those opportunities. So I would say, reading books like Ben Horowitz's book and other business books, learning about how companies work, business models. When my daughter came home from Duke, when COVID happened, she's bored to tears. And so she's like, there's a fruit stand down at the bottom of our hill. Do you think I could work there? And I'm like, go ask him. One, I wanted her to kind of get out of the house and do something. So she did that. And then I started asking questions. Well, what have you learned about the business, right? And so in almost everything that you can do, you can understand and look at what the business model, what makes this business thrive and work. So just be very, I would say, curious and open to learning and finding out new things. If you're interested in quantum physics, study more quantum physics. If you're interested in something on the science area, kind of immerse yourself with the people and learning about that area, I guess is the advice I would give.
Barry and Jeep, did you guys want to chime in?
I would like to add, when I look at myself in high school, there's no way I would imagine I would be here today. Okay, this is what I've done in my career is absolutely beyond my dream. And I would say that I would start with a purpose. I think the skills, the knowledge is going to be always there that she's going to have to figure out. When she is now she's 18, 10 years from now, 20 years from now, I think the society and the world will change very, very quickly, and she's not going to know, I think, where she's going to end up. A lot of college students actually asked me how to be a VC, what class they should take. And I said, when I was in college, this word didn't even exist in the dictionary, or at least in my world. But I always have a purpose, right? And for me, it's about economic development. It's about income inequality that I want to close. It's about how to create sustainable growth for the nation. I'm an economist by training. I used to work at the World Bank. And when the right place at the right time happened, because of the VC industry has been growing, because of the tech, because of the impact. So I kind of see the opportunity as I put these together and shape the business model and launch different venture funds. So I would be open-minded, but the purpose has to be very clear. Why, what she want to do and why she want to do it. so that when we go, up and down like a roller coaster, she will not give up. So I would do that.
Very well said. Thank you so much, Chief. Barry?
Yeah, I mean, I think if I were to add one thing to these great responses, it would be so much of what you do in this role is around relationships, and it's around selling, and it's around being able to articulate, why it is that a company should choose you as a capital provider. And, if I were to kind of go back and think about sort of high school days, it's, just learn to talk to people, right? And I think it's terrifying. It's a skill that all VCs have to go through, right? It's a skill that all investors have to build. But the earlier you start and the earlier you can, talk to people and have conversations, I think is a great skill to develop.
Well, thank you so much. I think we are almost out of time, and we have 1 minute left. So thank you, everyone, and thank you so much to our wonderful panelists for joining us today.
Thank you. Appreciate your time.
And thank you so much to our audience and for the great questions and for being great listeners as well. So thank you, and hope you enjoy the rest of your day.